Who likes the rebranding here? I think these slides are super hot, so I'm excited to get right into them. We don't have the disclaimer either. So I'll just shout it out. We just reformatted these slides. I'm just noticing this on the fly here. So nothing that we discuss here today constitutes any solicitation to buy or sell any securities. This is solely for informational purposes and not to be used as investment advice. For more on our disclaimer, you can go to allstarcharts.com/terms. So let's get started. We do this every Wednesday. Warren Buffett sighting. How can we not start there? If you read the morning note, you are well aware why I'm talking about Warren Buffett right now. So this was his third purchase just in the month of May. Hold on, let me throw up the YouTube. If you guys have any questions, comments, concerns, want to say hi, drop it in the chat, and I'll get to all the questions throughout the call. But hey, another big filing from Berkshire. You know, we're not seeing them buy in the same size that they were last year, earlier last year, even late last year. So let's take a look at what I mean by that. The most recent purchase, the Form 4 that we just got last night, was 270 million, right? Middle of the month, we had another handful of filings for about 325 million, right? So 600, about 600 million, but it kind of pales in comparison to his total stake, which is valued at, I think, north of 17 billion right now, right? So I would love to see him come out and buy in size here. This is his level. We've seen him buy in size, you know, earlier last year in the first quarter and early second quarter of last year. These were big filings, right? If we look back on this list, we kicked it off with a bang, 3 billion, 1.5 billion, a billion, right? Now we're talking about 100 million, 300 million in each filing. I want to see that size come back, really. And just so you guys know, these are what the filings look like. This is what we're doing for you every day. Who wants to look at this? Disgusting, right? Some of the data providers that we even use, and really for this research, for what we're doing here, we're going directly to the source, right? We're getting this information from the SEC, from the filings themselves. We're looking through all of them. Really, the problem is that these data providers can't get it right. I went to pretty much the industry leader for insider data. They have Buffett's position quoted at like just below 50% right now. Not even close. Like they have him owning like 400 million shares. It's just not even close to correct. You could see the total shares that he holds right here. They report it right in this column. So there you have the 220 million. We add the warrants, which are just, you know, a little bit above 80 million shares, and that puts him just north of 300 million. Total shares outstanding are about 900 million. He owns a third of the outstanding shares. If you count the warrants, we do count the warrants. I'll tell you when I'll stop counting the warrants, when this top completes. You know, if and when we get a valid breakdown from this topping pattern, and I have conviction that we will follow through below 60 finally, which we, you know, bears have not been able to get that done for about a year now. They get to this level and they can't break it, right? So until that happens, I'm going to count the warrants, because I know that Warren and Charlie and the other guys at Berkshire, when they get into their meetings and talk about Occidental, they're treating it as if they own those 80 million shares in warrants, right? They think this stock is going to be north of 60. That's why they keep buying it at 60. So for that reason, we're going to include the warrants too. Again, this is when and where Berkshire's purchased stock. This is now the third filing. We couldn't fit 3 highlighted circles in here, but there have been 3 just since May. Keeps coming out and buying. Looks good, but again, accumulating at the Buffett zone has been great, right? Because really haven't been stopped out of this trade for 12, 15 months now. What hasn't been great is that we haven't carried higher to our price target. So again, we'll continue to play this one cautiously. 57.50 is really that level. Coincides nicely with the Buffett zone. You got these, you know, prior cycle lows here from 16, late 17. You know, this looks like 2019 here. So as long as we hold this 57.50 level, let me check the stock right now. Again, you could keep accumulating it here, but I want to make some bigger points about the energy complex in general. This is our CRB index, which shown right here is 40% energy. I mean, there's just a ton of energy in the CRB. If we showed you the CRB index, it would look a lot like crude oil itself. And then this is our equal weight commodity index, which really tries to do away with that cap weighted type of structure, the CRB index, and it weights everything equally. So we have 33 different commodity contracts in here. It's obviously going to be heavy agriculture and industrial metals because most commodity contracts fall into one of those two subgroups. And look, it's leading to the downside, right? So while the CRB still has these Q1 lows to take out and looks dangerously close to doing so, equal weight commodity index already printing fresh 2-year lows, violating those pivot lows from late last year and earlier this year. If the CRB follows, crude oil is following because it's going to be what's driving that. And I would think energy stocks are coming under pressure. So if you look at crude oil today, it's had a really rough start to the week, and it's threatening those year-to-date lows, right, in the mid-60s. So it's something to monitor. If crude oil is breaking down, violating these prior cycle highs, legging lower, probably don't want to be in energy stocks, even Oxy. So continue to monitor it. Okay, now that Berkshire and Mr. Buffett are done, let's talk about some macro. Let's talk about what we're seeing. Tech stocks have been great, right? No doubting that. Growth as a complex has been the place to be. If you've been in anything but growth in 2023, you are underperforming. In fact, it's been really hard to outperform the NASDAQ itself. So the NASDAQ index, let me just do some quick math here. Let me remind everybody that in the last week of December 28th, just last year, NASDAQ 100 made fresh multi-year closing lows right about here, okay? Since then, so in the less than 5 months since, we've gained, I don't know, at today's price is about 34%. So the NASDAQ has come a long way in a short period of time. And that's what this chart is trying to show. I have the 200-day moving average here with green shade beneath it. And then this is the percentage away from the 200-day moving average in the lower pane. And that's just giving me a good read of like how extended are we, right? Based on historical standards. So there was a period in late 2020, Q1 of 2021, really like the first 2 months of 2021, which was the peak for market internals of the current cycle, where we were well above where we are today. Talking about like right here, right? The NASDAQ was really cruising. But if you zoom out just a little bit to the last cycle, 2017 was one of the best years in the history of the stock market. Low volatility. We just, steadily cranked higher all year. And guess what? We were never more extended from the 200-day average, long-term mean, than we are today. So again, new multi-year lows just late last year. 30 to 35% rally. And the NASDAQ is now more extended than it was at any time during one of the best years in the history of the stock market back in 2017. Semiconductors. This is SMH. Same thing. Drawing a line here just to show you. Far more extended than at any time in 16, 17, early 18. Yes, there were a few months in late 20, early 2021 where we were more extended than we are today. But the point I'm really trying to make is, so by all historical standards, some corrective action is very much warranted and deserved for the best stocks right now, for these growth and tech stocks. This is just for, perspective. This is the PHLX, Philadelphia Semiconductor Index, the SOX index. I wanted to zoom all the way out to the dot-com bubble because I knew that would change the way this chart looks. And it certainly does. Look, the 90s were crazy. Do we ever get back there? Maybe, right? But the current, froth or extended behavior of something like the semiconductor index really pales in comparison to what we saw in the middle to late 90s, early 2000s, right? But it's still, as much or more than we've seen over the past 20 years. How else can we measure, just how overcooked this recent rally might be? This is the one-day rate of change, but I'm only looking at positive days in the lowest panel. And then simply the 14-day RSI in the middle here, right? I've drawn a line where daily momentum tends to peak and roll over. And you see us consistently hitting, it's basically like the 86 level. RSI is an oscillator, it only goes up to 100, right? But we consistently peaked out at this high 80 level during the secular bull market, from 2010 through now. Consistently hit this momentum level and pulled back, right? And then what I've done down here is the update rate of change. You almost have to treat the .com bubble separately, right? So I put the first thrust here, and then the last one. And then I've circled and highlighted whenever we've gotten even close to these extremes that we saw during the .com bubble. And just to back up here, I probably didn't even explain what this chart is. This is technology versus the S&P 500. So this is tech on a relative basis. And what we're showing here, this yellow circle on the lower right, is that on relative terms, it's been more than 15 years since XLK or technology outperformed the S&P 500 so much as it did. This was the day following the NVIDIA earnings report. So last Wednesday or Thursday is where we're getting this reading. If I were to do this same analysis, but with the semiconductor index, right? So something like SMH SPY or SOX SPY, it would be the biggest single day outperformance that we've seen since the .com bubble itself. There's another way to show it. I mean, what a run it's been. 6 consecutive up weeks. You'd have to go back to, summer of 2021 for a better streak for the Vanguard Mega Cap Growth Index. This is ultimately the NASDAQ. If you look at the holdings of the Mega Cap Fund versus the NASDAQ, it's really the same thing. And, this streak should be longer. Really should, because look at the down weeks in here. They were barely down. They were pretty much unchanged. Right? We're talking about 10, 20, 30 basis points. Right? So this streak could be a lot longer. This is what you see in bull markets. But the point here is we got to cool off. These trends need to come back in a little bit. So we're putting on new positions in growth and tech. I don't think now is the best time. I think let's plan on a corrective wave. Let's see how that, kind of works itself out. And then I think we'll get better entries in a lot of the stocks that we want to be in the near future. But I don't love jumping in to new positions right here and now, because I'm really thinking from an index level, from a sector level, from a broader market perspective, we have some corrective action that really needs to come. I don't want to see some sort of nosebleed rally, right? Because they're not sustainable. I want to see an orderly rally where we leg up for a few months, we chop sideways, maybe correct, leg up again, chop sideways, leg up, right? Let's see an orderly rally. Otherwise, things will start to get unsustainable. Here are some of the candles from yesterday, or just one of them. This is Broadcom. I think it's important. We talked about on the morning show today, hey, do we worry about something like this? No, the answer is no. The textbook answer is literally no. A bearish candlestick, one bearish candlestick needs follow through. Today, I'm looking at this chart. We don't have today's candle in here because it's only 1 o'clock. We're higher by 1.5%. So we are not getting that follow through. Gun to my head yesterday, I would have thought, yeah, we're probably going to get that follow through. This just speaks to the resilience and the relentless bid for these stocks right now. When I look at the tape today, communications are up nicely. Tech is lower, but still kind of leading. Energy is the biggest loser on the day. Financials, industrials, all down big. Tech really hanging in there. Yeah. XLK down about 50 basis points. So where are we looking? Where are these things likely to go? Here's a zoomed in chart of, Broadcom just showing this recent base breakout. Ripped right to our target. Maybe it only hit it on an intraday basis. Why you got to have your orders in place. Look, this thing could pull all the way back to those former highs. And I won't be too worried. It would just be a textbook retest. Right? What we don't want to see is these former highs, the 675 level. This is the breakout level. We don't want to see that get violated. And I can show you a ton of bases like this that have resolved higher over the past few weeks. And now that base breakout level becomes the first line of support. We don't, as bulls, we do not want to see these base breakouts or these bullish pattern resolutions come undone. Right? It's as simple as that. So any corrective action, I'm looking at and liking the charts that don't fall back into their old ranges, that don't undo the base breakouts of the past few weeks. In fact, I would love some textbook retests of these base breakout levels, because these charts, when they resolved, you can see it right here on the right-hand side, they really went, and they didn't give people much of a chance to get in. So I wouldn't mind, corrective phase here that brings a lot of these things back to the base breakout level, and really good entries for us. NVIDIA, same thing. We got those former highs. I mean, this thing is really ripped, but 335 is that level. I mean, if you get it back there, it's a gift. I don't know if you will, but I'm not going to worry about a chart like this until it does come undone, right? I would love to buy this thing at 335. Advanced Micro, same thing. Getting the sympathy bid of the century over here. Really incredible. This stock rallied more on NVIDIA's earnings than it did on its own earnings. But look, again, speaking to that, extended type of overbought situation that we're in, momentum hasn't been this high. You got to go back to 2021. And if we zoomed out on this chart, it's historically high. So you got 2021, times in 2020, 18. This is the upper bounds of momentum for these stocks. And just to be clear, it's not a bad thing to get crazy overbought on momentum. It's characteristic of a bull market. But over the ultra near term, it does speak to exhaustion in the trend. So I'm not saying that the primary trend is going to reverse at all. I'm not saying that at all. These primary trends are very much intact. We got decisive resolutions. I'm just saying from a very short-term basis, probably not the greatest entry point here with how extended we are. Marvel, I'd be looking at, you got these fib levels here, 56.95. If you zoomed in on Marvel, you would see a cleaner base, and that level would be, hold on, I'm bring along the short-term chart. The base breakout level in Marvel is really like 50, 59. So you could see some big backing and filling in these things. There's a monster gap on the Marvel chart, just from last week that could fill all the way back to 50. What would that be? We're down 6% today. That'd only be another 17% from here. I mean, just last week, Marvel was up 44%. Give back 17. Not the end of the world. ServiceNow 520 is that base breakout level. We really like this one. I'm interested. This one's on my short list right now. Don't want to buy it here, though. Would love to buy it a little bit lower. This one really ripped on bullish comments from NVIDIA's conference call. These guys do things together. Oops, sorry. Dynatrace, DT, CEO buyer. That stands out, right? 48.75. Yeah, about 48.75 is that level. Again, this is what the chart should look like. If you're buying a chart these days, you should just think to yourself, is this the base? Is this the base that I want? And this is it. Above the August highs, or no, it was even Q2 highs from last year, above the year-to-date highs, right? 200-day moving average, long-term mean, flattened out, curled higher, overbought momentum, confirming the new highs. And if we looked at this one on a relative basis, you would see leadership there as well. In fact, you would see a chart that looks almost identical to this one if you did DT versus S&P 500. Resolving from base, taking out the year-to-date highs and the June highs from last year. Momentum, RSI is overbought. Trend, 200-day moving average is turning up. Relative strength, right? Leadership in that relative ratio. And then from an entry perspective, right? It's clean. You want to have these pivot highs, these levels. Typically, this is the August highs. This one's, this one peaked out earlier in the year last year. And then the year-to-date highs. You want to be able to define your risk and know where you're out, right? So you want a clean base breakout level. This one checks all the boxes. So 48.75 long to just above 60, and then over longer time frames, 80. Couchbase Inc. You guys know how I feel about this one. Again, let's walk through it. Overbought momentum reading. 200-day flattening, starting to curl higher. Really well-defined level of interest here, right? Where prices stopped, peaked, rolled over several times last year. Now we're taking that zone out 19 We like it long to 26. Guys, it's one of those markets again. These heavily shorted stocks are squeezing. They're really working. And I was saying on the morning show this morning, when do you want to look at your list of high short interest stocks? When other high short interest stocks are rallying. That's it. They tend to all go together. It's like an industry group, right? When one or two starts to work, then the rest of them start to work. Because, from a market psychology standpoint, there are market participants that see this. They see the ball start rolling, and then they know that just due to the mechanics of a short squeeze, if they get in, they can press that squeeze higher, right? So big institutions will see these shorted stocks start moving and say, okay, let's kick this thing off, throw some money at it. Shorts have to cover, and it just kicks off that little domino effect, right? It's exactly how it works. So Carvana, 50% short interest, the highest one on our list now because we no longer have Silvergate. Marathon, 40% short interest. And Sean just put an options trade on it today. MicroStrategy, also along that one. Through our options letter, 30% short interest. Talk about some that stand out from our list. Upstart. Listen, this one, you could draw a nice polarity zone here from the 23 to 26 range. This is the IPO day lows in 2020. This one really just came right out the gates, went from 20 to almost 400 in less than a year. Just incredible. That speaks to, the crazy froth and euphoria that we had in 2020 and 2021. So right back to this level. This is where the stock IPO'd at. And we also have the year-to-date highs here. Some highs from late last year here. Some pivot lows from earlier last year here. 26 is really that level for me. And listen, this is a high flyer, guys. This one has, some serious headline risk and everything else that comes with one of these, spec tech stocks. But we're above 25, 26. I do like it long. You're going to get a double from this. 26 to 54. Beautiful. It doesn't even fill the gap yet. Probably more to come. Look, when I look at charts like this where the 200-day moving average is still sloping a little bit lower, oftentimes these bases fail until that 200-day moving average has had time to really flatten and start curling higher. So let's contrast it with like a 200-day like Couchbase, right? Couchbase's 200-day looked like what Upstart's looks now late last year, right? Coming down, and then it kind of curled, now it's moving higher. Look at Dynatrace, right? Came down, now it's sloping higher, and it's been sloping higher, and price has been above it for 2 quarters now, right? Something like Upstart, we just got above the 200-day for the first time. Haven't been above there for 2 quarters. Hadn't really had the time to really flatten and curl higher. These bases are more suspect. I'm not saying they can't work. Meta did this. Meta's 200-day was not flat at all when it started ripping. V-shaped bottom. They're just, they're more unique. They're more rare than a really well-formed bottom. So maybe it needs more time. Maybe it does fail here. 26 is our level, so you shouldn't get hurt much. That's about 3 points lower from current prices. Actually, no, we're trading under 28 today. So keep it real tight. Less than $2. That's your loss. MicroStrategy. Hit 2 targets already this year on MicroStrategy. But now it's time to let this base really complete. Let's play it off the August highs. If you haven't got in, you haven't made money on this one already this year, I think there will definitely be more opportunities. This base is starting to shape up just like all the other bases that we want to be buying. 360 is that level. That's the August highs. We want to be patient here. We're trading around 300 today. Listen, it's only 20% away, 360. Stock could do that in a day or two. But this is a buy on strength setup now above 360. And we love the insider activity in this name. There's been plenty of it since last year. Marathon, sticking with the cryptos. Listen, the way I view crypto right now is it's just another subgroup or industry group of technology, crypto stocks, and they haven't been participating. So in the same way that we look at things like small caps or financials right now and say, they probably have some catching up to do. And we want to give them the benefit of the doubt because this is a bull market environment and we expect sector rotation, to continue to drive it. So those stocks should catch up. Even more so, you could apply that logic to a tech subgroup. Those groups should really catch up, right? Based on the price action in tech over the past month. And I would drop Mara and all crypto stocks into that basket of, boy, this could be a nice catch-up trade. And this base is really still shaping up too, right? So this one, we're playing it from 950. If we were to zoom in on this chart, you got a really nice coil here, just above the pivot highs from January of this year. That's about $9. And we've been coiling since early April. So almost 2 months, just a tight coil after, a face-ripping rally. On a year-to-date basis, the stock's up 3x, 200%. Now it's just coiling in a short-term continuation pattern above its pivot highs. By the breakout from this continuation pattern, I would throw that around 1020. 1020 gives you that breakout. You get confirmation at 12, and we will be taking profits here at the August highs, which brings you all the way back to almost $20. I would say more like 1850. So say $10 to 1850, maybe 19. Some really nice upside. So guys, I don't have my final slide here. So questions, comments, concerns, shoot us an email, info@allstarcharts.com. I'm just going to work my way through the chat real quick. Yako, you're awesome. Yeah, the Lululemons. No, for real. You heard me talking about that the other day, right? They're apparently really nice pants. A lot of my friends rave about them. What I will say is shout out Bird Dogs, because I've been wearing their joggers and they're amazing. They got all the pockets in all the right places. They're so comfortable. You could even wear them out to like restaurants. I mean, I live in Key West, so I don't have to dress too nicely, but I feel like I can go most places in them and then also lounge on the couch. So I'm bullish joggers, and I am going to check out whatever Lululemon's got going on. Apple Watch, yeah. Hey, Ty, how we doing? Timeless Ty. Buffett would act there. Listen, Buffett's a long-term investor. He's a value guy. He's making a bet that doesn't happen. Tyler's asking, what does Buffett do if energy goes down? Listen, he's going to protect his risk, but he's not a technician, right? So he's probably going to take a larger loss than we would as technical analysts. We're going to be out at 57.50. He's probably going to take longer to capitulate on that in the case that he is wrong. I'm not saying he is, right? We still need to see it, but I think the evidence is really starting to build against him. So we'll see. I mean, listen, we're monitoring crude oil at those 2018 highs, XLE at those 2018 highs, as close as anything these days. Well, I got to wrap this call up. I got another one at 2 o'clock. Oh, yeah. So I'm just looking at XLE right now, 76.60. I think it's lowest level since March. If it takes out those March pivot lows, 76.50-ish, I don't love it. I'm not excited about energy. I do think, JC continues to say the weakest group should catch higher. We should get that rotation, but let's see it. And again, I'll go back to like 2020, 2021, even 2022. Energy was ripping, cruising. Tech and the rest of the market was lower. We had energy up, everything else down. Why can't we now have tech and everything else up and energy down? I don't know. Wouldn't be the first time we saw it, right? You guys are all awesome. What's up, Nikki Booms? Can you outline potential drawbacks that we can expect and around when? Yeah, so on the Qs, I think you're asking about like if we get corrective action on something like the NASDAQ, where might we go? I think that's what you're asking there. So semiconductors, you got the August highs. I wish this chart was zoomed in more. I'm sorry, it's not. I'm not going to pull up the live charting right now because we're about to shut this thing down. But really, the August highs on any corrective wave here that we get, you don't want to see the base breakouts or these completed reversal patterns that we've been talking about for the past few weeks. You don't want to see them come undone, right? Those need to stay intact. That's what I'm looking for. So I'll be drawing the first line of support at the old breakout levels for something like the NASDAQ. It's those August highs. The S&P, we never even got the base breakout, right? So you would want to look at something like the pivot lows in the S&P. And if things get bad, really the lows from last fall. Not the bet I'm making. Can you please look at Intel? No, sorry, Giovanni, we don't invest in Intel here. You got to get rid of that stock. It's just a secular laggard. It's so bad. It'll weigh on your portfolio. It's been that way for 20 years now. It's not a good stock. They missed it. They were in a leadership position. They were in the best position to be running this AI revolution, and they blew it. And you can't trust them. You can't trust their leadership. It's a bad stock, serial underperformer. We don't like it, and we've never liked it. Awesome, Nikki. David, I have Lululemon. I love this, guys. Lululemon pants. All right, let's wrap this thing up before we keep talking about fashion. Can you take a look into INTA? Send me an email, Eric. I've never heard of that stock, INTA, but if it's an AI name, I'd love to know about it. Shoot me a note. Steve at allstarcharts.com. So, guys, that is it. We'll be back here next Wednesday. So, as always, if you haven't subscribed to the Hot Corner, it's a free daily note that highlights the biggest insider transactions from Wall Street to Washington to the boardrooms themselves. To get the Hot Corner, click on the link in the YouTube description below. Don't forget to drop us a like on YouTube, subscribe to our channel to get notifications for new videos, and follow me on Twitter at Strazza. All right, guys, until next week, have a good one.